The UK property market has ground to a complete halt, and millions of homeowners are now trapped in a situation they never saw coming. Behind the scenes of the recent budget announcement lies a tax trap so complex that even the experts are struggling to explain it to ordinary families. What's happening right now isn't just affecting the wealthy or property investors anymore, it's reaching into the lives of everyday people who thought they were doing everything right. The numbers coming out of the latest reports are genuinely alarming, and the government's response has left more questions than answers. If you own property in the UK, or you're thinking about buying, what we're about to reveal will change how you see the entire housing market. Subscribe to Property Reporter right now, because we're bringing you the latest UK property, economy, and housing news that the mainstream media isn't telling you the full story about. The freeze started appearing in the data weeks before anyone in the media picked up on it. Transaction volumes have dropped to levels not seen since the financial crisis of 2008, and estate agents across the country are reporting something they're calling the silent standstill. Properties are sitting on the market for months without a single viewing, and when viewings do happen, buyers are walking away at the last minute. The reason behind this isn't just about high interest rates or economic uncertainty. There's something far more sinister at play. The budget introduced changes to capital gains tax and stamp duty that have created a perfect storm. But it's the interaction between these changes and existing tax rules that's causing absolute chaos. Financial advisors are telling their clients to hold off on any property decisions until they can fully understand the implications, which means the market is essentially frozen in place. But here's where it gets really concerning for ordinary homeowners. The tax trap isn't just affecting people who are trying to sell right now, it's affecting anyone who might want to sell in the future. The way capital gains tax has been restructured means that profits from property sales are now being taxed in ways that catch people completely off guard. Someone who bought a second property 10 years ago thinking it would be their retirement fund is now facing tax bills that could eat up to 40% of their gains. The allowances that used to protect smaller investors have been slashed so dramatically that even modest profits are being hammered. What's worse is that these changes were buried deep in the budget documentation, hidden among hundreds of pages of technical jargon that most people would never read. By the time homeowners realised what had happened, it was too late to adjust their plans. The property industry is calling this the accidental freeze because nobody in government seems to have anticipated just how badly these measures would interact with each other. Stamp duty changes were supposed to help first-time buyers get onto the ladder, but instead they've created a bottleneck at every level of the market. People who would normally downsize to release equity are now staying put because the costs of moving have become prohibitive. First-time buyers who thought they were getting a break are discovering hidden costs and restrictions that make the so-called benefits almost worthless. The entire chain of transactions that keeps the property market moving has been broken, and each link that fails makes the problem worse for everyone else. Estate agents are reporting that some sellers are so frustrated they're taking their properties off the market entirely, choosing to wait for a better political climate rather than accept the current reality. Then there's the inheritance tax angle that's emerged as perhaps the most devastating part of this whole situation. Families who planned to pass property down to their children are now discovering that the tax implications have changed so dramatically that their entire estate planning has to be reworked. The threshold at which inheritance tax kicks in hasn't moved in years, but property values have continued to climb, dragging more and more ordinary families into a tax bracket that was once reserved for the truly wealthy. Combined with the new capital gains rules, some families are facing the prospect of having to sell the family home just to pay the tax bill on inheriting it. This isn't affecting millionaires with multiple properties and teams of accountants. This is hitting teachers, nurses, and small business owners who thought they were building something to leave behind for their kids. The emotional and financial stress this is causing cannot be overstated, and support groups are forming online where people share their stories of being trapped by rules they never knew existed. What makes this situation even more troubling is how it's affecting different regions of the UK in completely different ways. London and the South East are seeing some sellers drop their asking prices by tens of thousands of pounds just to attract any interest at all, while in other parts of the country, properties are sitting unsold at any price. The regional imbalance that already existed has been amplified to extreme levels by these budget changes. Areas that were already struggling economically are now facing the prospect of a complete collapse in property values, which means people's biggest asset is evaporating before their eyes. Meanwhile, in traditionally strong markets, the freeze means that even desirable properties in good locations can't find buyers. The mortgage market has responded by tightening lending criteria even further, which creates another layer of difficulty for anyone trying to move. Lenders are seeing the uncertainty and pulling back on products, offering fewer deals and demanding larger deposits than they did just months ago. Industry insiders are saying privately that the government massively underestimated how these budget measures would play out in the real world. Treasury calculations apparently assumed that the property market would continue functioning normally, even with the new tax burdens. But that's proven to be completely wrong. The revenue the government expected to gain from these changes isn't materializing because transactions have dropped so dramatically. Instead of collecting more tax from more sales, they're collecting less tax from fewer sales, which means the entire policy has backfired. There are rumours that emergency meetings have been held to discuss potential fixes, but any changes would require another budget announcement and an admission that the original plan was flawed. Politically, that's a difficult position for any government to take, which means homeowners could be stuck in this limbo for months or even years while officials figure out how to climb down from the position they've taken. The human cost of this policy failure is mounting every single day. For anyone thinking about entering the property market now, the advice from experts is almost universally cautious. The usual rules about property being a safe long-term investment have been thrown into question by these rapid changes in the tax landscape. Young people who saved for years to afford a deposit are now wondering whether they should wait to see if prices fall further or if the rules change again. Landlords who have built portfolios over decades are quietly selling up and moving their money into other investments, which is reducing the supply of rental properties and pushing rents even higher. The ripple effects are touching every aspect of housing in the UK, and nobody seems to have a clear picture of where things will stabilise. Some analysts are predicting that we're at the beginning of a multi-year downturn that will reshape the entire property landscape, while others think this is a temporary freeze that will thaw once people adjust to the new reality. What everyone agrees on is that the current situation is unsustainable and something has to give. The exposure of this budget tax trap has revealed something more troubling than just bad policy. It's shown how disconnected decision makers are from the reality of ordinary people's lives. The assumption that homeowners can simply absorb these additional costs or adjust their plans overnight shows a fundamental misunderstanding of how most families manage their finances. Property isn't just an investment for most people, it's their home, their security, and often their only significant asset. When the rules governing something so fundamental change without warning or proper consultation, the damage goes far beyond economics. Trust in the system itself starts to erode, and people become fearful of making any major financial decisions because they don't know what might change next. This frozen market we're seeing now is as much about fear and uncertainty as it is about tax rates and duties. Until that confidence is restored through clear, stable and fair policies, the UK property market will remain in this paralysed state, leaving millions of people trapped in situations they never chose and never saw coming. The question now isn't just how we fix this immediate crisis, but how we prevent future governments from creating similar traps that catch ordinary families in their web of unintended consequences.